one of the most exciting startups I've ever seen. I'm up at about 7 a.m. I don't feel very well, but I'm going through this because I believe in this company. I think it's very exciting, right? It's a pitch deck for BIYU. BU, or Bob is your uncle. Bob is your uncle. Building a circular future. You don't have to buy things. You can rent them. Own less, do more. I think it's what an amazing idea. You don't need to use Amazon. You can rent things instead. Look, high quality products. You know, imagine you have to buy a drill or DJ equipment, and then or you buy something cheap and you think, Jesus, why did I buy that when I need to buy the, if you're a DJ, you wanted to buy the Technics, but you didn't have enough money. So you bought new Mark decks and you thought, ah, oh, damn it, that's crap. Or you wanted to buy an Apple computer and you bought a really low quality one. The Apple computer I'm using right now, I bought in 2011 and it still works and it's great. But that costs a lot of money. Not everyone's going to have that money to buy it, you know, but you can rent by the day. So maybe you want to do that big, I don't know, wedding video edit. Maybe I don't know, maybe you need to edit a big film or whatever, but you only need to do it once. You can rent stuff. Nobody wants to deal with maintenance as well or repair of these big high quality products. And it's a contributor to, you know, consumption is a contributor to climate change. 72%. I don't think that's the biggest thing to think about BU. So it provides easy access to the highest quality equipment, building a circular future. It's like the Netflix of products. So it's like a subscription model. You don't need to, you know, you don't need to go on Amazon and buy stuff. You can just rent it. I think it's amazing. 5 clicks to start using a product, easy access through an app, same day or delivered, you know, within 2 hours. I think it's amazing. It's good for your wallet, starting at only €750 a month. It's cheaper than using existing rental companies. Right, wowzers. It's less waste. It's cheaper and it's less waste. I think this is an amazing deck as well. I did have a look at this before. It's recently launched. They were launched in Amsterdam, soft launch. They're seeking investors. They're looking for 1.3 million in this seed 2.5 round. So it's not the first seed round they've done. And they've raised 1.38 million in like 3 days. So they're not far off. And they're raising it quickly, which shows you there's something here maybe. Growth, 30 new paying members per week in a very small area in Amsterdam. Times that by 1,000 cities and suddenly you got 30,000 new users a week. 1,000 lower funnel website visitors per week. Lower funnel means bottom of funnel or people that are ready to buy per week. 15%. So, you know, when the company gets more well-known, they're going to get a lot more paying members per week. 15% of orders include a second product. That means the average customer value is going to be quite high. Average basket size is going to be bigger than just buying one product. Loyal membership base, low churn per week and high referral rate. When I saw this business yesterday, I'm telling everyone about it. I think it's amazing. Sorry, I'll get into present mode. I just think it's a really cool business. Success in nudging members from one category to the next, from DIY to cleaning, to events, to beauty or whatever. When you've got an expensive product and you want to buy it, but you don't have the money, this is probably going to be your app. 95% delivery on time, 4 slots per day, peak demand around the weekend. So not delivering all the time, they're delivering 4 slots per day. I think that's quite a smart move. They might increase that. I wouldn't be surprised if they could increase it to 8 slots per day and they start doing kind of the middle of the night as well. Because, you know, that could be amazing. Like just on demand, you can just get whatever you want on demand. I think that's just, it's mind blowing, literally mind blowing. Like you need a drill. It's like 10 p.m. and you want to do your DIY projects over the weekend, you get it straight away. Or you're running an event and you want, you know, maybe your amplifier is broken and you need it within 2 hours. Your event's about to start. You can get it here, you know, and you can be, you know, you don't have to waste the time going to the store. It's just delivered straight away. You know, 2 hours. I'm sure in the future they could do 1 hour delivery. You never know, 30 minutes delivery. Who knows? And of course, you know, there's a lot of lack of wastage, and it's clean. Look at this, the UI, the user experience is amazing. And the user interface, just look at it, it looks amazing. It looks like this could be a big, massive company already, and it's not. It is a small company. It's only valued, I think, at 10 million euros. Nothing. But this could be massive. Look at it. Jeez. It's amazing. They're looking at location and speed, central city hubs. Good idea. They're using electric cargo bikes for speedy inner city deliveries, carbon neutral delivery, very smart. Packaging and parcels, sturdy packaging, all boxes are reused, very smart. They're already thinking about flexible and demand-based, dynamically priced order slots and logistics. Again, very smart. Sorry if I am talking a little bit slowly, whatever, I'm not feeling 100%. Need to keep drinking water. On that note, bear with me. I'm going to let you read one of these slides. Read this. I'm going to get some water. Back in a sec. My apologies about that. Hopefully no one's left the stream, because this, for me, is one of the most exciting companies I've seen, and for it to be only valued at 10 million, I think is. Anyway, so what's the business model? Membership. 12 months is 750 a month, 6 months is 850, and a month-on-month basis is 10 euros. Selling consumables such as sandpaper, cleaning tablets, gas screws, plugs, smoke fluid, etc. That's the future. I'm not sure what PPU is, that price per unit maybe? And additional products, customers can order products without a membership. They're going to look at different partners like mobility, furniture, music, instruments, phone, photo, video equipment, and more. Rent extension from £10 euros a day, allowing specialist members to offer the services. Maybe they can link up services the same, like plumbers, handymen, DJs. So you can hire people as well. I think that's quite interesting. I think, to be honest, that these first two things, just getting maybe 1,000 highly sought after products on the platform, is going to be enough for them to be absolutely huge. You know, if you think about it, yes, Amazon might have 100,000 products, but it could actually be an amazing company. Amazon could, with just 1,000 products. And I think this BIYU could be an amazing company with 1,000 products. Yes, they can go into services. Yes, they can go to long-term rentals. And yes, they can go into ads. But I think just with these one or two things here, membership and the ability to rent lots of different products on demand in an eco-friendly way, they're going to be, I think they could be very, very big and a very good company. So let's look at them compared. So look at this, rental companies, for like cars and whatever, other stuff. I haven't even heard of these companies, to be honest, but same day delivery, no. Same day return, no. Multi-categories, no. Premier products, no. Rental, yes. Sustainable, mix of, prices high. Peer-to-peer, this is like the marketplace model. Same day delivery, no. Same day return, no. Multi-categories, yes. Premium products, yes. Rental, yes. Sustainable, yes. Price, medium. Amazon, standard delivery, mix. Standard return, no. Multi-categories, yes. Premium products, mix. Rental, no. Sustainable, no. Price, mix. BIYU, I haven't heard of Tulu, but maybe that's one of their competitors, possibly. Standard delivery, yes. Standard delivery, yes. Multi-categories, yes. Premium products, yes. Rental, yes. Sustainable, yes. Price, low. Tulu has small range and lockers. There you go. So BIYU is like the maybe the mass scaled version. You never know when BIYU gets bigger, goodbye to you. They got a surfboard there. You know, a lot of people do rent surfboards. That's quite an interesting model. I'm getting into surfing, or trying to. Cleaning products, barbecue, DIY, cooking, gaming, food, beauty. There's all sorts of categories this work for. And they're targeting millennials, which makes a lot of sense. You know, they're the on-demand generation. They want to order stuff and they need it now. There's 1.8 billion millennials around the world. Single largest adult cohort group, equal to 23% of the whole globe. Service addressable market, 80%, is 118 million. Now you need to split that out over cities, really, and I think that they're probably going to do that. So they're going to focus on cities in the Netherlands and Germany. The population of at least 150,000 combined with a high population density of 2,000 per square kilometre. This counts to 23 cities with an estimated 6 million millennials. Of course, what's going to happen is millennials start using it, and then Gen Z are going to start using it, and then of course the parents of millennials start using it as well. Company and product status. Product access platform that's ready to scale. They've already built the platform and they've coded it. They've added some product partnerships. They're starting marketing and communication planning. They're launching a beta in July. We're just about to enter August now, so that's probably launching. They're launching brand awareness and user acquisition, consolidating platform, using marketing experiments. I obviously specialize in marketing. I work for WhatsApp. I'd love to help them in marketing if they would be interested. I've got a lot of experience in reducing the cost of a customer acquisition, in some cases 10 to 50x. Anyway, enough about me. In 2022, launch pay-per-use. This is the cold rental. Scale up in Amsterdam, validate smaller city, scale marketing, hire key staff. Hopefully I can help them out. Then they're going to scale that internationally and go for Series A. They want to use SEO and search engine acquisition, SEA. So ads, this is what I specialize in. The route to anything: partnerships, removals, beauty, kitchen, cleaning, furniture, DIY, play and pie, gardening, mobility, musical instruments. Amazing. In-house software. So they're vertically integrated. That's what this is called. When they've got, they've got APIs, they've got a scalable architecture, they've got a solution for, cost per order, so payment solutions. They've got pick, pack, send and return now, flows, lowering cost per order even further, floating assets they're calling it, which is really good. The app looks great, to be honest. So it looks like they're going to start with hubs and then cities and then country. So that's thinking about go to market with payments and language and stuff, and then going global with a global catalog, all built on their BOB system, business operations backbone. Yeah, Bob's your uncle. I like that. So the thought of everything, even the branding looks cool, the systems look cool. And when I say look cool, I mean, they look like they're going to work. They look, and that's really, it looks like they're building for scale. And I think they've got a really good chance of getting there. Just look at the way it looks as well. It looks incredible. Their branding, their logistics and setup is smart. It just looks really good. Repeatable and scalable member acquisition. I completely agree. They're going to mix up some print as well, which I think is a good idea. Operational excellence. This is what they need to do well. Keep watching, guys. I'm going to give my opinion at the end about what I'm going to do and where I see this heading. So they're starting with hubs for order fulfillment, optimization, and utilization. This is really important because it's kind of sweating the assets. If they can, for example, if they have a drill, they don't want to just run out once. They want to be running out all the time so they can return a higher investment per asset. It's called return on assets, ROA. And that's going to be one of the biggest things for them. I think it's going to be return on customer acquisition or return on ad spend. That's the marketing metric And then return on assets is going to be their kind of operational metric to show how profitable they're going to be. So it's, you know, all these different things: storage, picking, extras, pack, deliver, return, clean and check. That's their process, and I need to make sure that they lower the costs and increase the returns, and optimization is part of that. Options cater for customer self-service, pickup and return. I don't think that's going to be the scalable model. I think the scalable model is going to be the delivery, because millennials want it now. They want it on demand, and they're willing to pay extra for it. And I think that's where the model is going to be, a bit like the Deliveroo model. But Deliveroo is very low margin and has extremely high competition. Yeah, I'm very excited about this company. So they have clean and repair. They've got like a circuit breaker thing where there's clean and repair. There's a simple addition of supplements, screws, etc. Possible by having operations in-house. Own less, do more. This is an example. It's in Dutch because they're starting in Holland. In Amsterdam. Awareness. They do hyper local, which is very smart because it's a good way of saving kind of your ad budget. Yeah, it's very good. Getting lots of ad clicks. I think this must be a marketplace in Amsterdam, the Dutch Gumtree, the same. I love that. I love the branding on their delivery bikes. I think that's gonna be one of their massive components. I think they probably need to install something like a QR code somewhere, maybe even like adding leaflets with the delivery, just because that could increase people's awareness, and like housemates, for example, might look at it, etc., etc. And people living in flats as well might see it. Investment opportunity, and I imagine a lot of people would actually be ordering these to apartments and flats, especially around Europe. This is their plan. Amsterdam hub, 1,000 members. Looks like they've already got that. Scale the number of hubs, and then unlock full 100 million revenue opportunity. I don't know if that means 100 million a month or a year. So they're going to do a Series A. This is why I think it's quite important to invest kind of now, because I don't know if they're going to need like to keep raising. A lot of startups, I'll talk about this at the end. So yeah, stick with me, stick around, because I've got a lot of thoughts on this. Remember, I've invested in over 75 startups and I've seen different things, and I want to talk about how this could actually end up. This is the finance plan. As you can see, I'm not going to dive into this because I'm not feeling 100%, but the main thing is that by Q2 23, they're going to be profitable. They're going to have an EBITDA of 58,000. This is Q2, which means they're going to be making around 236,000, something like that, 240,000 euros a year, just in, you know, less than a year's time, you know, which is amazing because Amazon wasn't profitable for many years. Yes, they reinvested, Amazon did, but just shows you this company like it's going to be profitable really, really soon. Even that they think even by the end of this year. So if you're watching this in 2024 or 2025, we can kind of compare. And they're saying that the size for Amsterdam, the ideal size is 4,000 customers. That means they can pretty much go to almost any city or town in the entire world and be profitable. Let's quickly just jump through this. As of July, they've introduced the cold rental app. They believe they're going to improve. This will allow us to like show our value props and generate meaningful revenues. Number two, the increased scale. Cost for delivery and pickup can be offered more efficiently. And with a client base of around 33,000 customers, delivery would be cost neutral. That's amazing because the on-demand model is going to be the model that's going to allow them to scale. If you imagine like Uber, like Uber's on demand, right? Like if you had to order an Uber and then like order it for like in a few hours time or the next day, not many people do that. They like it on demand. And that's where I see Bob's Your Uncle winning. Number three, designed to be operationally cash neutral at a customer base of 2,000 users. An optimal capacity of 4,000 users, their margin is going to be 36%. That's really, really, really high. I don't know what retail is. I think retail might be like, if anyone has invested in retail and knows retail, let me know what the margin is for retail. I think this is higher than retail, which is amazing because they won't own these products. I mean, they're not producing them. They're just buying them and then kind of renting them out. Number 4, scaling the hubs requires limited capital expenditure, CapEx for products. This is really important. They can grow without actually needing a lot of money. That also has some implications for fundraising and future, rounds. And I'll talk about that at the end. That's really quite important. So keep watching. Deploying new hubs will require only 275,000 in product CapEx. Considering salvage value and financing, this is 5K per month. It's nothing. They don't need that much money. So to get to about 20 hubs, they only need 5 million euros, which, for a company that could go global quite quickly, that's not a lot of money. That is not a lot of money. It's incredible. They're doing this they're kind of doing this in a kind of lean way, which I love, low capital expenditure. Operational expenditures for HQ require further investments for product development, marketing. I've contacted the owners. I want to help them with marketing if I can. HQ can service many hubs. Around 3,000 in HQ costs are discretionary and will only be done when the plan is on track. I love that. They don't need a big HQ until they start, ramping in different markets, and so the revenue starts coming in, profit starts coming in. So they need expected cash 1.3 into Q1 2023, and then 1.8 in Q2. So they may go for another raise in Q2 23. This might be the Series A, but I honestly think they're going to smash that. I don't think they'll probably raise 5 million in Q2 2023. I want to talk about it at the end of the video, so keep watching. Right, here we go. This is the customer base. Keep watching, guys. And if this isn't your thing, then you can skip to the next bit of the section. But this is the detail, so I'll go through it now. But don't leave, because I think this is a massive opportunity. This company, so definitely watch the whole of this video. Hub margin and product CapEx requirement, right? Okay, so the cold rental model, expected conversion rate will jump. They're going to combine this, and they expect that marketing conversion rate will go from 0.25 to 1%. Mate, if you're watching this, anyone is watching this, I know marketing. This is a strong proposition. I expect this conversion rate to go up massively. I reckon it could be between 3 and 10%. 1% is so conservative. It's low at the moment because it's a new business that no one's heard of. As soon as they start doing PR, leafleting, ads, digital ads, paid ads, referral campaigns, yada, yada, et cetera, that's going to jump. It could easily jump to 5%, 10%. Anyway, at scale, 4,000 customers. Their hubs will be operating optimal capacity. Think about it. Even where I live in Hertfordshire, I live in a city of like 30,000. I would expect them to be able to get 4,000 customers just in my little city. And imagine the areas in London. This would work everywhere in London. They could have 20 hubs just in London. Margin is 36%. Main cost of marketing. They don't need to do marketing forever. They can probably, if you think about like a small city of like 50,000 people, they probably need to do marketing for a year. After that, the referral and refer a friend campaigns and some like low-level marketing would be needed. I don't think they're going to need to market forever in every city. Probably need to do a pump, in each little city. So let's say you got a city of 50,000 or an area of 50,000, and you're targeting 4,000 users. I don't know, they might need to spend, 50,000 euros or something, or maybe less, 20,000 euros in that first year. And then after that, probably just a couple of €1,000 a year in that area, because you're going to have a lot of stickiness. These customers are probably going to start using this platform for years. And they've talked about that, a low churn rate. Let's look at 3. Taking into account peak rates, which is mostly Saturday, long tail distribution, seasonal rental patterns, that's seasonality, an average rental time per product of 15 hours, a product portfolio of only 700 products is needed to serve 4,000. This is what I meant. I don't think they're going to need tens of thousands of products. If they have the top 1,000 quality products, that's going to serve like 99% of everyone's needs. You're not going to want to rent something cheap and shit. That kind of knocks out the cheap variations. You just want the top quality stuff. So this business model is so smart. Total value hereof is 260,000 per 4,000 customers, including financing, an average 4-year usage monthly cost of €5,000 or 1.21 cost per customer per month. If a lot of that is marketing, which I think they're saying 26% is marketing, that's based on like what, a 1% conversion rate. If you 5x that, then that cost goes to like 5%, you know. So if you reduce that, it might only be 50 cents euro, 50 cents for marketing, not 3.5. And then their margin goes up considerably, you know, doesn't it? You know, it would be €7, not 13. So you go up to 50% margin. And I think that could happen with them. I really do. So you can have a company that's growing at 50%. Peter Lynch, the most famous fund manager of all time. Don't believe me? Google him. Peter Lynch said, if you find a company that is growing with a net margin or operating margin of 50% or more, this was his advice, not mine. You should sell everything and invest everything you can. And I believe this company will have margins of above 50% in the future. Maybe not now, but in the future, I think it will. And I'm going to caveat to say they might not ever get there because they might start investing in new products and services, a bit like what Amazon did, reinvesting revenue. But still, I think operating margin could be 50%. Maybe net margin might be less because they might be investing. And you can see here, they're expecting their rental customers to go up at one-off. I think cold rental, I think it's like one-off rentals, and their members to go up. I think this is very doable, by the way, because Prime members, this is probably a similar model to Amazon. I think maybe 20, 30% of Amazon users will be Prime. And I think this would be the same for them. This financial plan, so they've got like new customers, click-through rate. Again, this is going to skyrocket when their brand goes up. It's not going to be 1%. It's going to be like 5, 10%. Customer acquiring customer, they say it's going to come down from 10 to 5. Yeah, I think they could go even further, to be honest. I think it could go down even further. Cold rental, you know what? I'm not feeling 100%, so I'm going to have to skip this. It's unfortunate because I would love to go through this normally, but just because I don't feel super well, I'm going to skip it. Use of funds, they're going to launch the cold rental, more brand awareness. I think that's a good idea. Opening a bigger hub, they're going to expand the team. One full-time head of growth for marketing. I'd love to help them if I can. Implement better CRM and add more products. And experiment with long-term rental. I love everything, to be honest. You imagine you have a cinema night. There you go. You're only going to have like what? A couple of cinema nights a year. You might want to rent that. Have your friends over. It's the team. So they've got a small team, but they look good. You can visit them on LinkedIn. I'm not going to right now. I think what they've done already speaks for itself, to be honest. Co-founder, Martin, Franz, and Max. It's very good. And they've got an advisory board already, which I think is very good. Yeah. Some big companies there, Deezer. Founder of Elastic, which IPO'd, NASDAQ. Rabobank. Asset management. This is basically what this company is. It's asset management. It's just consumer asset management kind of rental model. I really think it's brilliant. So looking to raise 1.3. They've already raised about 1.3. They're about 80,000 off in the first 5 days. I can't go over this. I think it's these are the highlights, blah, 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 blah. Read that in your own time. And that's the contact details. All right, I'm going to stop sharing my screen. So I mentioned, I'm going to share my opinion now. Okay, so number one, I think, I've invested in lots of companies, and I both listed, shares and things, and non-listed, like angel investments, like these seed rounds on platforms like Seeders. And by the way, if you want £25 free, then click my link for Seeders, and you can get either £25 cash or 25 investable pounds to invest on Seeders, which is where BIYU is is floating, is raising their cash. Anyway, what do I think about BIYU? I think that companies like this are quite rare, and I'll tell you why. Number one, they've got traction already. Number two, they've got a product that people want to talk about. I read just their page. I didn't read this deck, and I'm telling everybody about it. It's a bit like Uber. When Uber came around, I don't know if you used Uber when it first came out, you wanted to tell everyone. Same with Airbnb, same with Amazon, same with Amazon. This is one of those products. And if they're able to execute and go to 25, 50, 100, 200 cities, they're going to be absolutely massive. They're only valued at 10 million. And I've got experience with investing in startups. Some work out, some don't. So, I'm not a financial advisor. I just use financial logic. And, I've watched some videos on this as well. And a lot of people agree with me on this, that there's a kind of power of large numbers of multiple bets within startup investing and angel investing. You don't know which is going to work out. But if you make a number of bets based on kind of probabilities and the probable outcome that they might succeed, i.e. not putting everything on one company, but maybe splitting your bets based on the companies that you have the highest conviction of, then you might do well. And less than 2 years ago, I had high conviction about a robotics company that has basically no competition in their space, called Miso Robotics. Check out, I've made some videos about them. They've gone up nearly 10x in 2 years. And I only put a kind of relatively small amount in the first raise. They're interesting because they allow investors to invest more or less like a couple of times a year. And sometimes you can just invest on their website. BIYU is different. They're raising now. And if you miss out, you might not be able to invest again. If you're watching this after the raise, if you're watching this after summer 2022, they're probably going to raise again, hopefully on Seedrs or Crowdcube or some of the other platforms. So check them out and make sure to subscribe to my channel, because I'm sure that when they next raise, I'm going to be investing and I'm going to be posting videos about it. So make sure to subscribe and hit the bell notification icon. But the fact here is that different startups work in different ways, and some will allow you to invest kind of regularly. They'll be doing regular raises, and others might do 1 or 2 big raises on platforms like Seedrs or Crowdcube, and then they just go to VC money and they don't raise again. So it's very hard to know how many times this company is going to go to Crowdcube or Seedrs. Sorry, this one's on Seedrs. No one can tell you, and this is why it's important, if you're interested to invest in a company like this. I'm not going to tell you what to do. You've got to make up your own mind. I've invested. I invested yesterday. I think I'm going to invest, I think I might invest more today. My problem is that I'm running out of investable funds because I'm getting married. All this stuff here is to do with wedding planning. It's not to do with investments. But anyway, I'm getting married in 2 weeks tomorrow. 2 weeks tomorrow, so 15 days. So I don't have as much money as I'd like. But going back to the point, is it's really hard to know like how many raises they're going to do. They talked about Series A in 2023. And hopefully they mirror that. A lot of companies will do a VC raise on the Series A. Also mirror on a kind of crowdfunding platform. It gives you another chance to invest. Hopefully, if you're watching this in 2023, you have that opportunity. If you have missed out and they don't let you, and they don't go to market with a crowd funding raise for individual private investors, it's unfortunate. My advice would be subscribe to this channel so that you hear about the next upcoming and exciting startups. I'm only really making videos about startups or companies that I get excited about, because there's thousands of companies out there. But I'm not going to make one that I'm kind of on the fence about, or at least on the initial outlook. I'll research them, go through the pitch deck with you guys. And 9 times out of 10, I actually like the company. And about 8 times out of 10, something like that, I'm investing myself. I'm investing in this company. I think that, like any company, I think that it could go badly. But I think the probabilities are, if we think it through, what we've actually gone through on the deck, they can go to a hub, a small area, where they're looking to get, between 2,800 and 4,000 users. They can do that for 250,000 euros, which is kind of pennies in the investment world. They're looking to raise 1.3. They've already raised 1.28. So that will allow them to go to whatever, 5 or 6 hubs already. And they could raise, I think they're going to raise over 2 million in this raise, maybe even 3 million. That allows them to get to 10 hubs, right? And if, like I suggest, their marketing costs are going to go down and their margins are going to be 50% instead of 38, that they might only need 200,000 or 150,000 to get to that next hub, which means they could get to, if they raised 3 million, they could get to 20 hubs before their Series A. That could demonstrate a boatload of traction. Imagine they go to 20 hubs and they get, instead of getting 4,000 users, they get 5,000 users. Suddenly they got 100,000 users, 100,000 users for their Series A. That would be amazing. And I reckon they're going to be able to raise a lot more money at that Series A if that happens. How probable is that? I don't think it's 100% probable, because nothing is certain in life. But I think it's pretty highly probable. It's a bit like saying, when Uber was doing some tests, right? If it worked in London, could it work in Birmingham? Yes. If it works in London, could it work in New York? Yes. If it works in London, could it work in Berlin? Yes. These things, it's like a global model. This could easily be global. People want to use a drill. They want to buy, they want to rent DJ equipment. They want to have a pie and rent some beauty equipment, or I don't know, a paddling pool for their kids, or like whatever it is, like they're going to want to do it. And it's the cost of living crisis right now. People can't afford to spend money on DJ equipment, on sound equipment, on a drill. Maybe they don't have a spare £200 and they do want to rent it for £5. Yes, it would work 100%. So I have high conviction about this company. It's a shame I can't put in more money. But I am restraining myself because I don't know 100% if this is going to work. So I think for me, I always have an internal struggle between, should I put a lot of money into this company? Should I forget about the other listed companies and, investing in Catebox or Tortilla or the other companies that I have high conviction about? And I struggle, but I think the answer is that yes, any one of these companies could do well. But if you put everything on one company, or if I put everything on one company, if anybody puts everything on one company, the chances are that in a lot of cases, you're going mostly on gut. You don't actually know if it's going to definitely be able to execute. And I don't know. Therefore, I'm going to invest. I already have. I'm going to invest again. But I can't afford to go, put the house on it, because so many different variables could affect this, and I don't need to go through all the risk factors, but there will be risk factors, and I think it's important to, when you have high conviction about a stock or a startup, to invest with conviction. But, it's important not to necessarily always go super aggressive, because the risks are that you can lose money. And I think for me, I'm looking at it, I'm kind of dividing my investment capital by like 10 or maybe 20, and trying to split it up into startups, right? But putting the majority early on, I think it's quite difficult because I'm doing it from earnings. So if I've got, let's say 10 or 20,000 to invest over the year, and you can multiply that, more if you earn more, or less if you earn less. The difficult thing is I'm doing it from monthly cash flow. So it'd be good to invest more at the seed stage, which I think I'm going to do. I think I'm kind of talking out loud about my process here, but I think BIYU, this opportunity is so good. I think I would like to try to find a way, even though I'm getting married, to invest a decent amount now, because in 3 or 4 years, I'm going to regret it and be like, why didn't I invest more at the start, right? Because the risk is going to stay the same, whether it's now or 2023 or 2024. They could still kind of fail. But if you get in at a 10 million valuation versus 100 million or 200 million, you're going to be a lot happier. Now, if I put in, let's say, I'm not going to put in this amount, but let's say I put in 10,000 now, 10,000 pounds, euros, dollars, whatever. I'm just going to use a fictional example here. But let's say you put in 10K now, right? And then in 2023, 2024, they do go to the market and they allow you to invest, but you don't, because you put in 10 here, you can only put in 2.5 here and 2.5 here. The jump from 10 million valuation to 100 million is going to give you 100K here, right? But let's say you only put in 500 here. You're only going to have 5K. That's £95,000 difference if they're able to execute. And I think they've stacked their odds in their favor. Remember, to get a hub up and running, they only need 275,000 euros. It's nothing, absolutely nothing. Misa Robotics needs probably millions to develop a machine, a robot. Uber needs like thousands of drivers. Like, this is last mile. They're only concentrating around a small hub. So I think the probability of them succeeding, I think, is quite high. Anyway, I'm going to stop talking. So I don't feel that well and I'm going off on one. But I hope you like this video. If you do, I make these videos for free. If you want to support the channel, then by supporting the channel, you can also support yourself. You get £25 free cash by joining Seeders, which is the platform that BIYU are on. It's if you want to invest in BIYU, you've got to join Seeders. So if you want to get £25 either cash or investable funds for free, join Seeders, use my link. It helps me, gives me £25 to invest as well. You get £25 as well. Everybody wins. If you want to find out more about exciting startups, then click the subscribe button and the bell notification icon. The worst thing in the world is when you find, for me at least, you find a good company, an amazing startup that's going to change the world, and you miss out. It is so frustrating, especially when you go on to see it 100x. It's frustrating. So consider subscribing and hitting the bell notification icon. Not for me, for you, because you don't want to miss out, and you don't want that feeling that you missed out on the next Uber or the next Amazon. And you know what? This could be the next Amazon. We don't know. I hope you like this video. If you do, smash the like button, subscribe, and the bell notification icon. If you've got any questions, queries, comments, let me know in the comment section below. If you're an investor in this, let me know what you think. If you're working on the team of BIYU, let me know what you think. If you would like to invest in it, let me know what you think. If you think I've missed anything, do let me know. I love to hear back from my audience. Love to hear back from you. Remember, knowledge is power, especially the right kind of knowledge. And of course, progress is everything. I'll see you guys in the next upcoming video. Take care.